Have buyers in Rutherford County left the market? It's a great question and one we're going to look at today on the Murfreesboro Real Estate Report. I am John Turner. I am the team lead of the Turner Victory Team at Onward Real Estate. We bring this Murfreesboro Real Estate Report to you every week where we cover not only Murfreesboro but all of Rutherford County. So that'd be Smyrna, Laverne, Eagleville, Las Casas, Rockville, and all points in between. We start out each week with our three things you need to know about the market, the Rutherford County real estate market this week. And the first question I just asked is, have they left the market? And the reason why I asked this is, and we'll get into our charts here in a minute, but our pending home sales this year, remember, they were way up. As a matter of fact, in June, I believe we were up 25% in our pending home sales. But this week, year over year, we are down 39%. So that's a huge drop. It may indicate some buyers leaving the market. It may have something to do with the mortgage rates, which we'll get into here in just a second. But we're going to look at that in a little bit more detail and what that means to you, whether you're a buyer or a seller. The second thing you need to be paying attention to if you're in the Rutherford County real estate market is the mortgage rates. We know back in February 26th, they were at 5.98. Now, this is the 30-year average fixed rate. Your rate's going to be a little different than the rates we're quoting, but this is a good gauge for us to look at. But it was at 5.98 in February, and that really kicked off a very strong spring and summer compared to the previous years. With that said, this week's rate is at 6.58%. What does that mean? Well, on the median home price, which for June was $450,000, so on a median home in Rutherford County, that difference in rate is $150 a month difference if nothing else changes. And that's it. That's assuming you put 10% down. We're not going to get into all the details of that. It's just a good gauge. The interesting thing about this is mortgage rates, even though they've gone up, are still lower than what they were in July of last year. Last year, they were at 6.74%. So that same house would be $50 more a month than what it is currently, and would have been $200 more a month than if you would have bought in February and got the 5.98% interest rate. So the second thing you need to know, whether you're a buyer or a seller, because sellers, these rates affect you too. But you need to know that the rates have continued to climb. The reason why, obviously, is what's going on. Well, among other things, okay? It's not just the Middle East, but the Middle East has a lot to do with it because of the oil prices, which causes gas prices. And since everything is affected by those, it leads to inflation. And inflation is not good for mortgage rates. So that's a pretty simplistic view, but that's what's going on. The third thing that you need to know about the Rutherford County real estate market, and this goes for any market really, but something we want to talk about a little bit today, is that comps alone, you should not use comps alone to price your house. So many times we do that. Hey, the house next door sold for this, so this is what I want to sell for, or this is what I need to sell for. And there's a lot more things that you need to pay attention to. For instance, you need to pay attention to not only the past sales, but we've talked about this, but what is your competition doing? It doesn't matter what the home sold for next door. Let's say they sold for $450,000. If your neighbor who has a house just like yours has it priced at $425,000, that is your competition. It doesn't matter that one sold 6 months ago for $450,000. The other thing, this ties in with some of our other points, is you have to look at everything else going on in the market. So a house that sold in February or March where someone was able to get a 5.98% mortgage rate may have brought more at that time than a house right now where it's costing that buyer $150 more a month, because you have to look at affordability and everything of that nature. So you have to look at inventory. You have to look at how many new listings are coming on the market, how many are pending, things like that we're getting ready to get into. So those are the three things we really want to talk about today. But let's jump on into our charts, and we'll kind of put all this in perspective. So here's our weekly snapshot of what has happened in Rutherford County. Now, if you'll notice, the Turner Victory Team Market Health Score is at 41. Last week it was at 43. It wasn't that long ago we were slightly above 50. The way that we calculate our score, the way we look at it is 50 is a very balanced market. Whenever we start getting below 50, we're favoring buyers more. Whenever we're above 50, we're favoring sellers more. So right now, we've definitely slid more towards a buyer's market. And not to get into the details of how we calculate this, but it takes in all sorts of economic factors. And we're looking at the latest trends. We're looking at inventory, different things like that, mortgage rates. But it really is starting to lean even more towards a buyer's market. Sometimes we look at days on the market or month supply, and we gauge that as well. But we like to take a little bit more in-depth look at it. So right now, 1,669 available homes on the market, which is a little over 3.5 months supply of inventory. And the as of Thursday, the Fred 30-year rate is 6.58%. Now let me make this just a little bit smaller. Remember, this light blue indicates the new construction, what percentage that is of the market. So total 1,669 homes on the market, 35% of those are new construction. So buyers, you have some opportunities out there with new construction, and there are builders that are giving some really good incentives. Reach out to us. We can help you walk through those and let you see where there might be some opportunities. Sellers, you are competing against new construction. If 1 out of every 3 homes on the market is new construction, that means that someone looking at your house, if they're looking at least 3 houses, probably one of them is a model home that they're walking into. So you've got to ask yourself, does your home look like a model home? I know you have to live in your home. I know it's difficult, but you are competing against new construction. You can see that below 500,000 is still pretty active, especially below 400,000. Below 400,000, we have less than 2.5 months supply. So that still leans towards a seller's market. 4 to 500,000, that is getting closer to a balanced market, and basically anything from 1.5 down to 500,000 is right now a balanced market, but you could see some of those are approaching what we would call a buyer's market. Now, this is strictly based upon the month supply. The Turner Victory Team Market Health Score actually looks at some stuff that helps us gauge what's happening even before it starts showing up in the month supply, and that's where we see it leaning towards a buyer's market. What are we looking at on some of those things? Well, first of all, we need to look at active inventory. Our inventory, we're looking at the orange line. The orange line is this year. Our inventory is higher than it's been in quite some time. 1,669 homes on the market. This time last year, we had about 1,540. And then you go back a couple, that's actually 2024. There was only 1,100 homes on the market at that time. So we have nearly 500 more homes, actually more than 500 more homes on the market right now than we had back at the same week in 2024. So that's a huge increase. That means buyers, you have a lot more choices. Sellers, you are competing. Buyers, there's still buyers out there, but they have so much more to look at. So that would indicate that, number one, showings, you're probably not going to have as many showings as you would have had a few years ago because there's more choices and buyers are looking at different things. Also, as we said, there's just more competition. When there's more competition, there is this downward pressure on prices. At least it's holding things in place. Is it going down? Well, there can be an argument made for that. Month supply. This is the one thing that's held fairly steady. And the reason why it's holding steady, even though we have more inventory on the market, is because we have had pretty decent closings over the past few months. Now, I will submit to you that if things continue to slow down on the pending side, which we're going to look at here in a second, that this month's supply will start rising, and it will probably rise fairly quickly depending on what exactly is going on with pendings. The other thing that's really kept us from getting into a place where we're seeing a huge decrease in prices is the new listings. If you look at the orange line and compare it to 2025, we have been running below last year, and especially these past 2 or 3 or 4 weeks, we've really kind of dropped off on our new listings. So inventory is not coming on the market quite as quickly. So even though it's building, it could be building quicker, but there's just not as much inventory coming on the market. And this is the trend that we've been watching now for, 5 or 6 weeks. Over here was that 2, 4, 6 weeks ago, we had a nice little bump in pendings. We talked about June definitely outpacing last year on pendings. And then we saw it drop off. Now, it was still ahead of last year. But the question was, would we see it rise back up after the 4th of July holiday? And not only has it not risen, it actually has dropped the past 3 weeks fairly significantly. This time last year, we had 124 homes go on the market. This week, we had 76. So that's a 39% drop. I suspect that has to do with mortgage rates, and not only that they've gone up, but they were lower back over here. So I think maybe some of that pent-up demand actually we saw in April, May, June actually come out and put homes under contract. So I'm really not sure what that holds for the future. My guess is if mortgage rates stay where they are, we're going to see a few weeks of pendings staying a little bit lower. But again, my crystal ball, it's cracked. My predictions aren't always correct. I do like looking at the trends, and I think it gives us some insight. So that is something that we are watching. When we look at the speed of the market's still doing fairly well for homes that are priced correctly and presented correctly. Across the market, nearly 33% of all homes that go under contract, that's the key, the homes that actually go under contract, nearly 33% of them go under contract in that first week. We're going to circle back to this here in a second. So I do want to hit on this in the $400,000 price range. What this is the true original list price. So a home, when it was originally listed, whether it's been relisted or not, whenever it was originally listed in the $400,000 to $500,000 price range, if it went under contract in that first 7 days, it got 99.5% of asking price. If it went under contract between 8 days and 89 days, it brought about 96.5% of asking price. And if it went over 90 days and it went under contract, which, the stats show a lot of homes that go over 90 days don't even go under contract. But if it did, it brought about 93.5% of asking price, the original asking price. And we're going to come back to that in a second because I've got one important thing here that I'd like to show you, one little chart. One other thing I want to hit on while we're here at these charts is the showings. If you are in the 300,000 to 400,000 range, you're having about 2 3/4 showings per week. Anything besides that, you're dancing on either side of one. As a matter of fact, in the 500,000 to 600,000 range, you're getting about, on average, just a little above half a showing a week. And you can see how we peaked over here several weeks ago at across the board 2.38 showings per week, and now just across the board 1.35. So our showings have been cut in half over its peak earlier this year. So let me see if I can't find this one chart here. Maybe I get it, maybe I don't. Actually, I don't. So I had a chart, I guess I didn't pull it up here, but it was very interesting stat whenever we talk about the purchasing power of the median home price in Rutherford County. Because right now, the purchasing power of a median home price, so if in February you were able to buy a $450,000 house, using all the same criteria, all the same income, all that, just only changing the interest rate to today's interest rate, you can afford a home about $29,000 less than what you did back then. So what is that? $421,000 house? Yeah. So you went from being able to afford a 450 to a 421. If you remember that chart that I just showed you a few minutes ago about price reductions and people going over 90 days, the interesting thing on there is that a home that's been on the market for over 90 days is selling, if it sells, it's selling for about 6.5% less than what it was originally listed at, which coincidentally is about $29,000 less than what it was from its original price. And I say that to say that there's definitely a correlation there, okay? Now, is it a true dollar for dollar? I don't know. I mean, that could be a real coincidence. It may not be. I think it's more than a coincidence. But the point is that as a seller, you have to look at all these things and say, okay, I understand why people got $450,000 for their house back in February or March, but the mortgage rates were lower. I can ask that same price now, or maybe since they got that, I want to ask for more. And that's, I mean, if that's what you want to do, it's your house. You can ask whatever you want to for it. But what we are seeing right now with the market, I just showed you, there's half as many showings as there have been. So that means, quite frankly, there's less buyers out there. We have looked at pendings trending down. Probably a lot of it has to do with the mortgage rates because we showed how homes are becoming less affordable each time the mortgage rate goes up. So if you're a seller and you are needing to sell or you really want to sell, you need to take all that in consideration when you're pricing your house and not just get stuck on the comp and what your neighbor sold for 4 months ago, 6 months ago, whatever, because those were different market conditions than what they are now. That's the reason why we track this information every week, because the real estate market changes. I mean, it's not a drastic change every week, but as you start watching this every week, you start seeing those trends and you start seeing how things are going. And I'm telling you right now, our market is trending down. Now, a little drop in interest rates and mortgage rates, it may change just like that. I don't know. I can also say that traditionally right here is where everybody's getting ready for school and we're starting to get towards the end of the summer per se. I mean, I know it's not over till September or whatever, but school gets back in early August, so that's when everybody kind of considers the end of summer. Our market has traditionally dropped off then as well. But a couple of years ago, we did see it really jump in October and November, which traditionally it doesn't. But mortgage rates had dropped down about 0.5%, 0.75% back then, and it gave a big bump in buyers coming out. So you need to pay attention to this, but as a seller right now, you've got to really look at the market, look at your competition, look at your potential buyers out there, and you need to be realistic about that. The good news for buyers is, hey, you got some leverage. Each day that goes by and each day that the mortgage rates stay up, that's a little bit more leverage that you have. But whether you're buying or selling, if you're looking to do this in Rutherford County or quite frankly anywhere in Middle Tennessee, our team can help you. So please feel free to reach out to us. We love using this data to help guide you through the process. Again, I am John Turner. I am the team lead of the Turner Victory Team at Onward Real Estate. We bring this Murfreesboro Real Estate Report to you every week. So I hope that you enjoy it. Please feel free to reach out to us and let us know if we can help you in any way. And until next week, I hope you make it a great week. Thank you.